G'day folks, welcome back to another update for natural gas. Now we've had a price spike over the weekend, and that's due to the divergence we forecast previously. Before we go any further, make sure you hit that like and subscribe button to support the channel. And apologies for today's audio, we've got some technical difficulties, but I want to get this video out to you ASAP. Looking further also in terms of the outlook for natural gas, as of today, February 3rd, the rapid expansion of AI and data centres is driving substantial increase in energy consumption. By 2028, AI is projected to account for approximately 19% of data centre power demand. This surge necessitates reliable energy sources, with natural gas emerging as a key provider due to its efficiency and ability to meet large-scale power requirements. Today's price surge is primarily attributed to forecasts of a polar vortex bringing the coldest weather in a decade to northern states of the US, significantly increasing heating demand. Natural gas prices have risen by 4% since the start of the week, with futures briefly topping $4 per million British thermal units. So here we always start with the long-term trends. We've got the monthly, the weekly and the daily. Now the monthly's broken higher into a bullish momentum on the CCI 150 in alignment with the break above on the price on the moving averages. These moving averages, by the way, on both the CCI and the price are available in the description below for those new to the channel. You can reference that video to learn how to draw them on your charting software. So bullish momentum on the monthly. Has been bullish momentum as well on the weekly since around September 2024. But notice on both the price and the CCI, it's broken into that moving average range on both the price and the CCI, giving us a neutral positioning on the weekly. On the daily, it's been bearish now for a number of days. In fact, going back, started around about 19th of January. But notice it was bearish. Now there's no divergence here to talk of. It actually broke through this minor support, and we did say be careful, it might drop down towards this descending trend line. And we always look at the micro chart. So if we go to the micro level, so we always go in the direction of the higher time frame, so you would have been going short only. But having said that, notice here we've got a bullish divergence. Now on our last video, this dotted line, it broke above the moving average on the 1 hour chart. And we did say do not go short on this one because of the hourly. So we always, even if you're trading on the daily, we always look at the hourly chart for any micro divergence or micro trends. Now, what it's done since then, if I drew a Fibonacci between that low and that high, you can see there it's bounced and broken up and hit that 50% retrace level. It broke right through this initial minimum retrace. And that minimum retrace would have been, if I let me just do this, if I pull that Fibonacci back to that high, that's where that minimum retrace was drawn, but I pull it back to the other high, so it's pulled back through that. And this one actually, depends where you draw the Fibonacci, this one actually bounced off the 61%, or if you pull the Fibonacci up to that level, that was a 50% level. It doesn't really matter, two key significant Fibonacci levels, but it broke through our initial area. So again, I'm just emphasizing, even though it was bearish on the daily, we always look at the micro charts for any divergence. And here we had a bullish divergence. I don't trade these. I look at these as a potential area not to invest in. In other words, if I was going short and I started seeing a bullish divergence, I would not be entering any short positions. And you would have been wise to heed that, because here it's broken quite strongly, as I said, above that break. And it's actually now potentially, we could see further highs, or in this case, we could see a continuation to the downside. But again, I'd like to see this break below and invalidate this divergence now. It's already hit that divergence level, break below on the moving averages on both the price and the CCI. And by that stage, we should see further downside. Alternatively, if this continues more to the upside, it's already bullish now on the hourly, but don't enter long positions until you see this daily break above the moving averages as well, on the CCI at least, to go long. So at the moment, neutral positioning, don't enter long or short until we see more a definitive viewpoint on the daily. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.